Good morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Today we just start by reflecting on stock market returns yesterday. We know 2023 has got off to a very strong start in terms of returns for both equities and bonds. Yesterday we saw a bit of a pullback within both stocks and bonds after what has been on Friday a surprising US labour market report. We heard from George yesterday, took us through the report where the data showed the US labour market continues to be very strong. Unemployment fell from 3.5% to 3.4%. 500,000 jobs added over the month. That was more than 400,000 than what was expected. With the US labour market so strong, very good for the US economy, helps consumption to continue an elongation of the cycle, but the challenge is on the inflation front. Stronger labour market means wage growth pressures should remain and make inflation more stickier. Therefore, the markets yesterday started to reprice where interest rates would finish. They pushed up interest rate expectations higher, and therefore you saw some weakness in bond markets and in equity markets. In the UK gilts, UK government bonds, saw noticeable weakness after one of the Bank of England member, Catherine Mann, came out and discussed, in her opinion, the need to continue to push up UK interest rates higher. And this was just after last week's Bank of England meeting where they increased interest rates, but also announced their latest forecast for inflation, which they revised down lower. So a bit of weakness in the UK government bond market yesterday. In terms of economic activity, a very quiet day yesterday and this morning. So we focus on corporate earnings. We have been keeping you up to date over the last few weeks on corporate earnings. Today, BP, the UK energy company, announced record profits of 28 billion, which is more than double of that what they achieved in 2021 and their highest in their history, really benefiting last year from high energy prices. As a result, they are increasing their dividends by 10% for the last quarter, but also returning capital to shareholders through buying back their own stock. So they announced for the next 3 months they'll be buying back their own shares in total of 2.75 billion. So very strong results from BP, and they're also going to increase the amount of investment by 10% going forward. We heard from Shell last week, who also announced record profits of around 40 billion. They also have looked to raise their dividend by 15% and also increase the amount of share buybacks they'll be doing by about 4 billion. So energy companies in the UK continue to do very well, benefiting from the high energy prices that we saw last year, that have started to normalise. So that'll benefit shareholders, and there'll continue to be that political pressure and discussion within markets whether the windfall tax on profits that was set at 35% last year on any extraction of oil and gas in the UK is set at the right level. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.